Hello traders, this is Rich from TradeSight. This is the market preview for the coming session. This is going to be for Tuesday, May 1st, 2013. With a session that was mostly higher on the day, but it was definitely concentrated with strength in the NASDAQ versus the other broad market indices. Broad market really lagged for most of the day, and the Dow Industrials didn't get green until very late in the session, so it was really a NASDAQ-led rally. We had a good performance out of Apple, which is very heavily weighted, but the overall NQ side of the market was definitely the better performer today. Internally, the market was okay as far as advanced declines go. Put on a plus 1,000 on the New York side and a plus 500 on the NASDAQ side. The one interesting thing was the New York trend will close well above 1 at 1.24. So while the market is advancing, it's not really doing so with good market internals. And on the flip side of that, though, there's two ways to read that, though. The other way to read that, though, is that while the market is advancing, it's not really getting internally overbought just yet, and we'll take a look at those metrics in a little bit. But let's turn our attention right now to the ES futures and see what they have to say. Okay, so here's a look at the ES futures. Just slightly higher on the day. As you can see, we did gain a little bit of ground, but really didn't do too much. So technically, everything's pretty much the same. The only thing that's really different from the last couple sessions is that we do have this 13 exhaustion in place. Levels to watch overhead. Key level is going to be 8 ace at 1625. Down a little bit lower is going to be the 10 EMA. That's going to be key support, and also the low from the last down day from 2 days ago. So those are the near-term levels in the ES futures. The other one to watch is going to be the risk level or the stop loss level for that sell signal in the ES, and that's coming in at 1608. And the thing that's going to be important about that level is that that's something that's really just our thing. That's not a lot of other people have it, but the markets do know where these levels are, one way or another, and they do find a way to use them. So be prepared for that if we do continue up in the next day or two. Over on the NASDAQ side, a little different picture. We really expanded the range a little bit better. We talked about that relative strength before, so now we're definitely starting to push up here a little bit more aggressively. We're pushing up near the plus 2 ace level at 2890.5. That's going to be a very important level because that's one of the stronger levels in the Murray Math sequence. So definitely pay attention to that if we get up there. As far as support goes on the downside, plus 1 ace level at 2851.5 is going to be a minor level. And then we've got the 10 EMA below it, which right now is 2831. Also note that we're now 6 bars up on the count, and the CCI, while we're making new highs here, is not critically overbought. You can see how it got critically overbought here at plus 311 right in this area. Then we had to have this drop to the downside, but right now we do not have that condition present. Okay, internally I think there's a couple key things here. First is we did make a new high on the New York side of the cumulative advanced decline line. It's still holding above our trend line and racking out new highs. So we got a little bit of a buffer before we get back down and interact with that. But at the same time, the NASDAQ side of the market is getting back up into this broken trend line. So now this is going to wind up being resistance. So perhaps we're going to see more of a pause day tomorrow in the NASDAQ side. And if that does happen, then we definitely want to see the slack being picked up by the broad market. If everything just kind of sputters out together, that's going to be more concerning to the bulls. Okay, when we go into the Fed meeting, I always like to take a look at the commodities too, because a lot of times the commodities do a little bit better of pricing in what might be happening on the other side of the Fed announcement. So let's take a look at the OSX versus the oil futures themselves. The OSX is in the red, and as you can see here, we really didn't break down with any authority while the crude futures were really cascading lower. So that implied that we're going to pull back up here in the crude futures. So we were actually looking for this snapback to happen, and it did certainly very vigorously. Today we had crude prices to the downside, but the oil services stocks were higher. So we've got yet another divergence. So we can look for the crude futures to find a little bit of a foothold tomorrow. We're not going to have a breakout and look for a breakout in crude until we clear this prior high here in the OSX. But if we can do so, then we could pivot back higher and see much higher crude prices. Then we can start talking about perhaps $100 oil again. But for now, we're still range bound in OSX with a slight divergence to the upside. We'll have to see if it builds and leads into anything more meaningful. Here's a look at the NDX versus the SOX. I'm going to switch to the daily time frame. While the index was strong today, the SOX really didn't add very much, and really didn't get any good distance up here to get up and challenge this this trend line that it broke to the downside. So for now, unfortunately, the SOX was kind of a little lackluster today. So we're hoping to see a little bit of performance so we can break that trend line and perhaps really get the NQ side rolling, where it can really last and follow through. Here's a look at the NDX versus the SPX. This is the weekly time frame. You can see that we are starting to curl back up here. We've just now begun to get back above this breakdown level, but we're starting to see a little better performance out of the NDX. Let me shift down to the daily so you can see a little better detail. But you can see we're starting to curl up here. This downtrend line has now been broken. It just needs to follow through to the upside. I'm going to actually add that trend line right now so we can have it on our chart. That's right here. So we've just taken it out now today. So all we have to do is follow through above that and get some relative strength rolling in the NDX. Here's a look at the 10-day trend. We had that high end of day reading, I should say, reading in the New York trend. So what we did is we actually really didn't get any more overbought here. We actually moved more towards oversold in the New York trend. So there's a ton of room before we get to the 0.85 overbought threshold in the 10-day trend. So this continues to imply that there's still gas in the tank for further upside in the market if they can get it done. Here's a look at the total put call ratio. We got up really close to the reversal threshold, mid-month here. What do we do from that? We kind of pivoted back to the upside here because traders got too bearish. Right now we're moving a little bit towards the overbought threshold, but we're not really there yet. So once we get below 0.6 or a little bit lower, we'll start getting concerned about being overbought, but we don't have any kind of a climactic reading just yet. All right, here's a look at our SPX TLT cross. We're still down below the channel trend line. We've got a very short-term positive bias with traders putting risk back on versus the alternative asset of fixed income. Right now we're still below this trend line here, but it's not on the chart right now. Here, I'll draw it in real quickly. We're still below this breakdown, just kind of making this wedge right now. So all we have to do is just monitor this to see which way we're going to break out of this. If we do break out of this falling wedge to the upside, hopefully we can put this lower band of the threshold back into play and see a better risk-on appetite. But until we break to the upside, we're still in an intermediate downtrend here with risk being taken off the market. All right, here's the multi-sector daily chart. You can see that have this potential double top here in the BTK, the biotechs. That's the red. A lot of those really got hit today. They're definitely exhausted. We started rolling back into a little bit of relative strength in the banking index, and also a little bit into the stocks, and we're starting to see a little bit of a bounce back here in the XAU. A lot of the gold stocks had very, very strong closes today with healthy closes above the VWAP. Probably some short covering today ahead of the Fed announcement tomorrow. Well, let's take a look at the individual sectors. I'm going to rank them from best to worst. The XAU had that strong finish today. They were the top gun. Computer hardware was also pretty strong. We had a good performance out of Apple and some of the other names. The SOX was reasonably strong today, and you can see that the pharmaceuticals really underperformed today. They got hit very hard. They were the last laggard, and the BTK, the biotechs, were also fairly low on the list as well. So definitely seeing a little bit of rotation here. But let's take a look at the individual charts. Okay, here's a look at the XAU. Definitely positive on the day, but it really doesn't move the needle and change too much. We're still kind of lateral here with a pretty flat 10 EMA. We are trying to claw higher here, and we're now 6 days up in the countdown. So we got another 3 days before we potentially run into trouble. Keep an eye on this little gap here. This gap is about 114 and a quarter. if we do continue higher, that's going to be a definite obstacle when we hit that gap window there. Here's a look at the SOX index. SOX index is pushing out a little bit higher here. It closed just above the risk level from this very flat 13 exhaustion. Next near-term level is 445.31. Then above that, it's going to be 453.13 at the plus 2/8 level on the Murray Math box. That's going to be a key level on the upside, because if they do take that out, that's going to frame shift this and open it up. To the downside, we actually used it today, but there's key support here at the 8/8 level at 437.50. Next support is going to be the rising 10 EMA at 434. Oil services, we're pretty decent today. A little bit of a bounce up here. Keep in mind that this 8/8 level at 250 is going to be very strong resistance. When we start to interact with that, if the trend continues to the upside, above that, it's going to be 253.91, which is the plus 1/8 level, and also this reference high here. BKX was kind of pounded higher today after having some pretty decent weakness midday. You can see it did use the 8/8 level in combination with the 10 EMA for intraday support. That's coming in just above 56. We're going to have some pretty good resistance if we get up to the static trend line right here, this green line, at about 57.25. So be on guard for that if we do push higher tomorrow after the announcement. Here's a look at the BTK. BTK was pretty weak midday. They did kind of circle them back, but there was a fair amount of selling today and some distribution. Keep in mind that we do have a seeker exhaustion in play here from a few days ago. If we do continue higher and kind of shake loose out of this little consolidation, the next big level is going to be 2,000 at the 8/8 level here. And to the downside, near-term support is a 10 EMA, which we used today, and then just below that is going to be this 6/8 level at 1875, which was also this prior high right here. As far as pharmaceuticals, definitely saw some downward activity in the pharmaceuticals. We're 10 days up in the seeker count, and if we get up to 13, we've got some decent extension here. If we get up to 13 and get up in this 8/8 level or even higher, we could have the potential for a decent little reversal to the downside, at least for the near term. So that's one I'm going to be watching carefully next couple of sessions. Here's a look at the oil chart. We talked about that weakness that we had today. Well, there was some strength in the oil services names. We have an inside day here, so if we break out of this either way, that's going to have some extra punch to it. If we break out above, about 95.31 is going to be the first level that you should be watching here. It's going to be this minor level, this 5/8 level on the Murray Math box. And then if for some reason they really spurred it higher, then this static trend line, that the green line here, is going to come into play, which was already used previously here in the very beginning of April. To the downside, there's a cluster of support here with the 200 DMA in the 10, just right around that $92 level. Here's a look at the gold futures. Gold futures are now 8 days up on this bounce, so one more decent close to the upside here could give it a place where it's going to stop or take a pause. So definitely want to keep an eye on that. To the downside, near-term support is going to be the 10 EMA, 1446, 1445. All right, folks. Well, tomorrow is the Fed announcement. It could be kind of a barbell day where we have a little bit of volume in the morning, then maybe some light volume during the midday, and then pick up after the announcement. So definitely be prepared for that. If we don't get much of a reaction right after the announcement and then the guidance that's associated with it, just be prepared for a good day still possibly on Thursday, because a lot of times it does take until the next session for the real move to reveal itself. So don't be impatient tomorrow. And if you don't see something that makes sense, a good clean setup, then just pass on it, because then we'll probably get a good shot on Thursday. All right, folks. Well, as always, thanks for listening. This has been Rich for TradeSight.